Well, hello, Pinto. How are you? Will you help me educate them to become savvy investors for the years to come? All right, everyone, that was my version of ROE. Hope you enjoyed it. Hope you enjoyed the intro. Thanks for stopping by. This week's video is on ROE. Should it be low? Should it be high? And what is the ROE of, say, Amazon, Netflix, Apple, Microsoft? And at the end of this video, I'll be sharing with you what those are. ROE is a great way to measure the profitability of a stock. It does really show the health of a company and if they're able to return a profit with the size that they are at. So just like a person who has to watch their blood sugar levels or their sugar levels, even caffeine levels like me. Hey, one simple way to remember ROE is like a car running on energy, and its energy is fuel. You fill it up. So going on a full tank of gas is a must. You want to make sure that you don't run out of gas halfway through the trip. That would be really bad. So Levi's version of running on energy is drinking coffee and maybe energy drinks in the afternoon. A few hours later, you get the idea. So an example of ROE is little Johnny running his new business of selling Pokemon cards to friends and family. At the end of the year, he's made $100. He's come out ahead. Yay! Now, let's add up all the equipment and resources he used to get that $100. And that ends up to be $500. Not too bad for his first year. He probably could do a little better. Now, what we end up doing is dividing the $100 by 500. That gets us to that 20%. Now, the $100 that he made at the end of the year, that's his net income. And the $500 that we added up for all the equipment that he uses for his business, that's shareholder equity. That's what investors know it as. And the 20% that we came up with, remember we divided the 100 by 500, that's the ROE, return on equity. And so this really gives us a simple way to figure out if a business is doing well. Johnny knows that he could do better this year. Johnny gets a bright idea to buy a display to up his business. So what he does is he calls the best guy in town that has money, that's ready to invest in his business. And the guy asks him, hey Johnny, why should I invest in you and not your competition in the other town that's doing the exact same thing? Well, Johnny is really smart and says, hey, I have a ROE of 20%. My competitors, they only have a 10% ROE. They spend $1,000 for their business and they waste a lot of money and get about the same return. So I am a fast growing company and I am a lean, efficient business. Invest in me and I'll share in some of my profits with you in the years to come. The guy says, great, I'll give you this display. So Johnny is now crushing the competition and he is now on track this year to make about $200. So let's roll to the end of the year and let's look at Johnny's business now. Now he has made $180, so he almost met that goal of $200, but he's got $180 at the end of the year after all his expenses and liabilities. So now he has, as all of his assets that he uses to run the business is at $600. That gets him a 30% ROE. So the year before he had an ROE of 20% and now this year he's got 30%. So yay, that's an improvement for his business and he can now share that with future investors. Johnny's business is now off to a great start. He's able to use the assets and the things that he has and be able to create a lot of extra cash to grow the business. Now, one way you could grow your assets and investments is by using Webull. Check out the link below I have in the description of this video, and you can sign up with Webull and get potentially a free stock starting at $250, valued all the way up to $600. So it's a great way to start investing, and it's virtually free money. They're going to give you a free stock when you sign up. Invest $100 or more into the account, and you're able to get trading right away. Now make sure to do your research before you just buy a stock, and hold it for as long as you can. Alright, now back to the video. Here's where you're able to find the ROE on the different websites. A good level of a ROE is between 15 and 20%. The ones above that are going to be really the outperformers in that industry. Probably the most common ROE that's used is the trailing 12 months, and that's just abbreviated with the TTM acronym. Here are the ROE of, say, Facebook, Apple, Amazon, Netflix, eBay, Tesla, Visa. These are just some of the largest leader stocks in the stock market right now. Did you think Apple's ROE would be so high? Or that Zoom's shockingly would be so low? Tesla's is only around 5%. Now I can see why investors had hesitation in investing in this stock when it was around $300. It has a big run up since then. Value investors are the main types of investors that use ROE. Because ROE valuation is a fundamental look at a stock, they're the ones that majority use it in their trading strategies. Technical investors, they base their decisions on the price movement of a stock, and they don't look at the fundamentals of a stock nearly as much. That might be lower on their list, but primarily they're looking elsewhere. The trading platforms and brokers update a ROE on a quarterly basis. Now, not that type of quarter, Pinto, but you're close. It's every 3 months. Now, a ROE of a stock can change if a business makes a large change to their balance sheet. If they choose to do a big buyback of shares or decide to sell a part of their business, that's going to affect the ROE overall. Now, some ambitious investors, they really want to get the big picture of a stock and see if they have a competitive edge. What they do is they take the time and look at the 5 years of an ROE and calculate both the 5-year assets and also the 5-year history of the net income. Now that you've learned a little bit about ROE, what I want you to do is go check out 3 of your favorite stocks that you know about and look at their ROE. Are they a leader or lagger in their industry? And that just simply means, do they have a really high or a really low percentage of ROE? And that's going to tell you the health of that business. Are they actually making a profit at the end of the year? So now you've gone out and you've taken some time to look at those stocks that you want to research, but you're not quite sure how to incorporate that into your strategy. Well, here's a simple way to start. What I recommend you do is take another fundamental metric and use the PE ratio. I created a video on that. Here in this corner you can find out and watch that video of what a PE ratio is. And then I would add a third element to that, and that would be the 100-day moving average. And it's real simple. Whenever the stock price rises above and it stays above the 100-day average, that you stay and enter a position there in that stock. If it dips below the 100-day moving average, then that stock is in a downtrend and you should exit your position. So using these 3 together gets you a good start to an overall trading strategy that is going to allow you to make gains and to exit positions when stocks don't perform well or are in a downtrend for months on end. Do you choose a player or a team based on one stat? I wouldn't. So what you can do is you can combine these different ways to look at a stock and create a trading strategy. ROE is a fundamental valuation of a stock. It's just one way to look at the health of a stock. There are many others out there, and I do plan to cover those in this channel. So be sure to subscribe and like this video so that you can see those other videos when they become available. If a business finances suffer, then it's going to show in the ROE. The next time someone asks you, hey, is X stock a good one to invest in, you're going to be able to let them know, hey, look at the ROE. Does it have a high percentage of profitability? And that's going to determine if the management is actually able to turn a profit with the assets and the things that they have in the business. Well, that's it for this video, guys. I hope that it made sense for you and that you just learned a little bit more about investing and what a stock is all about. Hey, I'm confident that you guys are going to be able to find great stocks, invest consistently. Stay well, fellow investors, and I look forward to sharing more with you shortly.